Borrowing money can fund a new home, pay for college tuition, or help start a new business. Financing options range from traditional financial institutions, such as banks, credit unions, and financing companies, to peer-to-peer lending, P2P, or a loan from a 401k retirement plan. Find out about the pros and cons of the 8 best sources of borrowed funds so you can consider all your options before applying. 1. Banks. Banks are a traditional source of funds for individuals looking to borrow to fund a new home or college tuition. Banks offer a variety of ways to borrow money, including mortgage products, personal loans, auto loans, and construction loans. They also offer opportunities to refinance an existing loan at a more favorable rate. For example, personal loan balances grew sharply in 2023, according to data from credit reporting company Experian, although they rose less last year than in 2022. Unsecured loans, the type offered to borrowers primarily based on the applicant's credit history and income, increased by 9.4% to $194 billion in 2023. Its consumers held 28.86 million unsecured personal loans last year, according to Experian. Consumers often have an existing relationship and an account with a bank, and personnel are usually on hand at the local branch to answer questions and help with paperwork. However, banks tend to have high costs associated with loan applications or servicing fees. Banks may also resell loans to other banks or financing companies, and this may mean that fees, interest rates, and procedures may change, often with little notice. Borrowing from a bank. Plus, banks are well-established sources of consumer loans. Consumers often have an existing relationship with a bank, making it somewhat easier to apply. Banks may resell your loan to another institution instead of offering you the title of loan. Fees can be high for loan applications or servicing, etc. 2. Credit unions. A credit union is a cooperative institution controlled by its members, usually those who are part of a particular group, organization, or community. Credit unions offer many of the same services as banks, but may limit services to members only. They are typically non-profit enterprises, which enables them to lend money at more favorable rates or on more generous terms than commercial financial institutions, and certain fees or loan application fees may be cheaper or even non-existent.